unchanged. The Federal Reserve leaving interest rates unchanged at a range of 1.75 to 2% in a unanimous decision. The Fed says further gradual rate increases will be needed or are consistent with economic expansion, and made some slight upgrades to the economic assessment here. I'll give you some examples of those. It says economic activity is rising at a strong rate. Before that, it said solid. The labor market continues to strengthen. That's the same as last time. Job gains were strong on average in recent months. Unemployment rate has stayed low. Last time it said it declined. And household spending and business investment both given a pretty strong market, saying they both have, quote, grown strongly as well. Inflation remains near 2%. So last time it said it had moved close to 2%. So that's the Fed kind of saying we are close to our or at our mandate of 2% or our target of 2%. Inflation expectations are little changed. The risk to the outlook roughly balanced. Monetary policy, the Fed continues to say, remains accommodative. So not much change at all here. A very slight upgrade to the economy, reflecting the better GDP report we had. And I'd say still signaling those rate hikes ahead, guys. Back to you.
Did you read the part where it said the president should keep his tongue and bite his tongue whenever he wants to speak?
Hold on, Tyler. Let me see.
It's not in there.
I don't see that part. No, there's no mention of the president and his commentary. Or no, it's not in here, Tyler.
But the very lack of any change in wording is a commentary in itself.
Yeah.
It is saying we're not changing anything. So if something happened the last 6 weeks, we're not paying any attention to that because we're going to focus on our job.
We're sticking with our.
Well,
yeah,
Dave,
exactly.
Dave, there's also a little bit more to that, which is look at the probabilities, and I don't have them in front of me right now. I'll get them in a second. But what the Fed is also saying by that is what you thought about the outlook for rates going into this meeting should remain the same. You shouldn't change your idea.
And this isn't surprising, right? Humphrey Hawkins just happened. The Fed's Jackson Hole conference is coming up. It's not surprising that they haven't made any real changes here. There was just a chance that they might say that monetary policy will be neutral instead of accommodative to reflect getting rid of some forward guidance. They haven't done that this time, but they probably will the next time.
They did, though, say that economic activity at a strong rate. I think there are folks out there that believe that this 4.1% read on GDP or whatever that final number is, around 4%, that could be the best we see this year. Is that maybe not the case?
No, I think that is absolutely the case. Q2 is as good as it gets. I think a lot of it was driven by exports. I think a lot of it was tariff driven. So a lot of other countries trying to get ahead of the tariffs by importing stuff from us before they hit. So I think Q2 is as good as it gets. But that being said, I think Q3 and Q4 will be pretty strong as well. I mean, 4.1% growth is pretty extraordinary. So even if it decelerates from there, we're still doing
I know they're
well.
always high, but the Atlanta Fed, their GDP growth expectations for Q3
they're
are
always
at
high.
5%.
They're always high.
Hey, Michelle, can I comment on that?
Especially at the beginning of the quarter, right?
Right.
Because they include data as it comes out. They're always really extraordinarily high at the beginning.